It's time for another episode of Let's Talk Business South Carolina, featuring industry outlooks, panel discussions on trending topics, and interviews with business executives, community leaders, and government officials. And now, coming to you from the Drum Creative Studio, here's your host, longtime South Carolina business publisher, Rick Jenkins.
Hello, everyone, and welcome back to Let's Talk Business South Carolina. I'm glad you joined us today. Today, we're going to be talking about the lending industry and the challenges that they are dealing with over the past couple years, really. I think everyone knows we've had inflation rates that are up and down, a real roller coaster ride. The feds have increased interest rates 11 times in about the last 2 years, not even 2 years. Lots of things going on there. There's lots of challenges, but there is also opportunities as well. Here to have the conversation with me today is Bart Willey. He is the Upstate Market President for Truliant Federal Credit Union. Bart, welcome to the show.
Thank you, sir. Glad to be here.
I want to take a second and talk about you, and I want to talk about Truliant. Now, let me make sure that I've got this right here, okay? So you correct me if I'm wrong. Truliant headquartered up in Winston-Salem, North Carolina.
Correct.
Right? You've got about 36, 37 branches. Most all of them are in North Carolina. However, you got a few in Virginia, and now I think you have 3 or 4 in the upstate of South Carolina. You've been here a couple years, I think, or maybe even longer. Tell us about Truliant.
Well, fantastic. Well, I think the first thing I would tell you is you've got those pieces correct. I think where I would surprise you is that we've quietly, in some ways, been here since the early 1990s.
Okay.
A lot of times we think of credit unions and how they started. Well, we started helping the employees of Western Electric and then kind of grew from there. And one of our employers, J.P. Stevens, asked us to come to Greenville almost 30 years ago to take care of their employees. So we've had a branch here since about that time in the early 1990s. However, we just recently started our true expansion in the upstate. We grew into Charlotte. We matured there. And naturally, the upstate is a wonderful place to be. So already having a branch here, we've been very excited to start expanding. We have 4 branches open now, our newest out on Wade Hampton and Greer.
Bart, where are you from?
I'm originally from Texas. I have lived a little of everywhere in the United States.
Yeah.
I can tell you I absolutely love South Carolina. Married a South Carolina girl, so be happy that I'm back here in Greenville in the upstate and excited to be leading this growth.
How long have you been back in South Carolina?
So we have been back here now 2 years, me and my wife.
Yeah.
I have been back here 2 years, and
Right.
The kids have gone off to college, so
Empty nester.
empty nester.
Okay.
So, at this point, raising the dogs, as they say.
Hey, I am right there with you, and I'm liking that life, to be quite honest with you. Is it true everything bigger in Texas?
Yes, it absolutely
bigger.
is. But I'll tell you this, though. South Carolina is a beautiful state, especially with the rolling hills and
Yeah.
the greenery that we have around here.
Yeah.
So, yes, I'll always tell you I'm a native Texan, but I am an adopted South Carolinian and love being.
All right, good to hear. All right, so let's talk, before we get too much into the industry itself in terms of how it's being impacted by the feds and inflation and that kind of thing. Let's talk about a credit union just for a minute. Now, there are a lot of differences between a credit union and a bank. I've had several folks on here. I've talked to bankers. I've talked to folks like you. And I always start with this because there's always confusion out there about the differences. So just lay it out for us.
Right. So we'll start with the simplest way to define it, because everybody believes they understand, or they have a version of what they understand of credit unions. And the reality is that credit unions and the laws around credit unions have changed over the years. So whereas in the past, I mentioned that we started by serving Western Electric employees, and we grew from there. However, at this point, some credit unions, like ours, are chartered in a way that almost anybody can join. So the surprise to many people is that you too can come join a credit union. So here's the underlying difference. A commercial bank has stockholders, and it's owned by those stockholders. That's simply just a fact. They have the ability to raise funds by issuing stock, and then they distribute money back to those stockholders. Whereas a credit union, and this is the part where people get confused, a credit union is a not-for-profit. So we do not have stockholders. Easiest way to point this out is when you listen to the financial news, you hear about banks, you never hear about credit unions. That's because there is no stock. There is nothing traded. We are owned by our members. And the simplest way to understand that is when we generate revenue, our purpose is a financial institution, exactly the same as a commercial bank. However, when we earn revenue, it goes to one of three people. It goes back to our member, it goes directly to the community, or it goes into building the information technology and other pieces of infrastructure we need to serve that member or the community. So there is no money going out to stockholders. That's the primary difference.
That's a great explanation. Tell me, if you are a member of a credit union and you are one of three ways that that money is dispersed, how do you feel that as a member of the credit union?
How do you feel?
Yeah. How does that money come back to you?
Excellent. It comes back to you in the form of either higher interest rates on CDs and money market accounts, lower fees. Now, I will tell you, and I think we might get into this later, where regulation comes into play. And as a credit union, as a not-for-profit, we made a decision, and this is an example where something that's not required by regulation, but might be in the future, is the reduction or elimination of NSF fees. Well, we as a credit union, to give back to our members, eliminated the NSF fee over a year ago. So that's a simple place where, you think about regulation and you get just a little bit ahead of it, but you also find a place to return value to your member.
Got it. Thank you for sharing. Let's talk business. The uncertainty of the interest rates over the last several years. Inflation, as I mentioned, been doing this roller coaster ride. Fed's increased rates 11 times in the last 2 years or so. It looks like there might decrease some, here coming up. But it has played havoc with that industry to some degree. Tell me where we are today.
Well, where we are today is you have an industry that is settling. So it's becoming more settled with this higher for longer that the Fed continues to push. The industry is still very robust. The challenge becomes the math. When the interest rate is higher, the payment is higher. It doesn't matter whether it's a house or a car or a commercial real estate building. That also impacts the ability to borrow, and it impacts the ability to move. So we have to be open to helping our members and helping our commercial clients with, how do I make the numbers work at this point? And we can get into that more in depth as you'd like.
What is a good interest rate these days? 7.5%? Something like that?
That is such a beautiful question, and it depends on, one of the things nobody wants to hear is it depends.
Yeah,
that's the worst
thing. Credit. It depends on a lot of things.
Exactly. But home loans. I think right now that home loan mortgages are in the 7s.
Yep.
The Treasury bills have dropped dramatically in the last couple of days as of this taping. So those could change. They could also go back up. But I'd say anywhere in the 7s right now is an expectation.
Yeah, and what was it, a year ago, they were in the 4s or something ridiculous, right?
Yes.
And the difference in something, let's just say 5 and 7.5, the difference in a couple percentage points over 30 years for an average home in South Carolina, which is around $350,000, you're going to pay about $175,000 more today than you did a couple years ago, which is a little daunting to some. However, 7.5, we just got spoiled. 7.5 is way more close to what is historically a good rate than what we were experiencing. Is that correct?
Right. Yeah, the shock is the change, is the speed and the rapidity of the change. That's what hurts.
Right.
Once you become accustomed, as there was a time, and I think many of us will remember talking with our parents, where they paid 14, 15, 16% back in the 70s.
Right.
They think 7% was a fantastic rate. And even as late as the 2000s, the early 2000s, a 7.5% rate would have been fantastic. But it's because we went to the 3 and 4% that rapid change, if you go from 4% to 7%, you've almost doubled your interest charge, and that is very painful along with the inflation that goes with it.
Right.
So getting good advice is important in this.
It is painful, but other than the last 2 years, it is certainly not out of the ordinary.
Correct. That is a long-term average.
That's right. Let's talk about challenges in your business other than what we just discussed. And I'm going to kind of tee you up here a little bit and run through some things that kind of come to my mind when I think about what challenges might be. And let's see how you respond. let's start with customer expectations. We are in the online world these days, right? Instant gratification. I want it and I want it now. You can go online and get approved for a loan just like that. You can't for sure do that at a bank, and I'm not sure how it works for you guys. Is that a challenge for you all to keep up with that online approval process?
It absolutely is. And I would tell you that we are very forward-leaning into the technology piece. So we have had online systems in the AI space to help us, but we are still huge believers that our population, so our membership base, are people that some of them are very online savvy. However, we have a lot of communities that we serve that need individual human touch. So when people are making big decisions, we go back to the purchase of a home when interest rates are 7.5 instead of 4, and the valuation has risen. So they want good advice. So what we find is for people who want a pure online experience, there are organizations out there for that. We find that the people we serve, when they need to make an important decision in life, they want to come see a person. So we are still investing in the branch network, having people in your community that can sit down with you and have a one-on-one conversation, give you good advice. So yes, we are actually investing in some very exciting technologies that I cannot get ahead of announcing at this point. But we are certainly very excited about what the new technologies are bringing to the table. They'll make life very easy and very user-friendly. But at the same token, we will not be stepping away from that commitment to having people in the community where if you're uneasy and you want to go sit down and have a conversation, there's somebody there to do that with you.
You know, when I was growing up and my folks were growing up, we looked at our bankers as our partners in one way or another, and I think that's what I hear you saying. You talked about technology and not prepared to quite just yet say something, but I do want to ask you about a specific technology, and that's artificial intelligence. AI, we talk about it on this show all the time. AI is in every single industry. And there are wonderful opportunities with artificial intelligence, and there are challenges that can be concerning. Nonetheless, AI can help you be quicker, and it can help you be faster in pretty much every industry if it's used correct. Yes?
Yes, that's absolutely a fact. One of the things that we would point out to everyone is AI and its value comes from where the information is that it's given. So it's very important to be very cautious and know very deeply what the information source is that AI is drawing from. So what we believe is that there's tremendous value to AI, and we are going to lean into that with the oversight and direct knowledge of individuals. Where the greatest value is at the moment that we perceive is in the tasks that can be automated quickly so that the individual can spend more time one-on-one adding value to the conversation and automating simple processes. And then at some point, it'll grow up from there. But we also want to warn people, especially our membership and others out there, that AI also makes it where you as the consumer are going to be at risk because there's fraud out there that needs to be attacked. And if you are, that's another reason, that's ultimately another reason that we believe that the person there in your community is still important, is because if you're not sure whether something is fraud or not, please take a moment, step back. If you need to, come into an office and talk with somebody. Don't jump at it. AI is too good and it's too fast.
Yeah, that's a good point, and I do agree with you about issues like cybersecurity, which you were alluding to. Cybersecurity has become more and more, hacks have become more and more prevalent over the last several years. And I've had IT folks sit in that chair, and we've had this conversation before. Just a slight tangent, folks. One of the reasons is that 4 years ago, when COVID pushed us off into our homes to work remotely, all of a sudden we got folks that are working remotely that are not necessarily behind that business firewall. And now they are more susceptible to be hacked. To what degree is that a concern for you guys? I would think, correct me if I'm wrong, that a bank, oftentimes bigger than a credit union, right? Many times much, much, much bigger than a credit union, and might be able to have the support system to be able, from a cybersecurity perspective, to be a little more secure. How do you all deal with it?
Well, there's scalability, certainly. However, as a highly regulated industry, we all apply very extensive controls and protections for cybersecurity. So at this point, certainly every organization in the financial system is a target, and we are always motivated to find the best, most efficient way to keep everyone safe. That is our number one goal at all times.
Yep.
In fact, that's why I tend to bring it out here in the conversation. We are talking about business, but where we're seeing dramatic amounts of fraud is with the member, with the individuals at their home, with the elderly. And so anything that we can do to spread the word on how do you step back without hitting that button and sending your money or trying to write a check to somebody you're not sure about, is please come get one-on-one personal contact where we can help you, filter that out as to whether it's fraud or not.
Right.
Because that tends to be what's happening in our communities these days on a very dramatic level. Like you said, the people are alone at home.
That's right.
And people take advantage of that.
Right. Another challenge that reaches across all industry is workforce challenges. We're all having trouble finding people, right? Mm-hmm. I mean, it really, in South Carolina, you know that we are manufacturing centric here, and it kind of runs our economy to one degree or another. And they're having a lot of workforce issues. Finding the right people is not always easy. How are you all dealing with that? And is it an issue for you?
Well, it's not as much of an issue as you might perceive on the surface. Mm-hmm. We are rated as one of the great places to work. We have a great culture, and we attract people. However, what I would say is where I would set us apart is that when we are looking to open a new branch, when we are looking to grow, we are very proactive months in advance, getting to know people, getting to know the community, and then really trying to draw in our employee base from the community that we are going to serve. As an example, we like to, in a community that is predominantly Hispanic, we like to have native-speaking employees. And I would point out something I learned that I thought was fascinating is, a bilingual person is someone who's learned another language. A native speaker is someone who grew up speaking it. So by having native-speaking people in those branches, they can better serve those communities. A perfect example is our Cherrydale branch in Berea. So we like to have it staffed with people from the community. So yes, from the manufacturing sector, we hear that constantly and in other industries. However, in our particular situation, we really have found the Upstate to be a wealth of talented people, and we've really had some success drawing on those people.
That's great to hear. Yeah. Moving on, the financial sector is heavily regulated, to say the least, right? Regulations exist for a reason, folks. They protect us, they protect our businesses, and they are absolutely necessary, but sometimes red tape can be red tape. What about in your industry? How is regulation? What are the challenges of dealing with that? Because it changes a lot. You got to stay on top of it, right?
It does, and it can change very rapidly. As we know, as elections come and go, different focal points of regulation come into view. So I think that the simple way for us to approach that is to say that we have to look at regulation as the playing field. We have to look at the parts of it that have the most value and apply them, because you're absolutely right. It is absolutely a fact that the industry has regulation to keep people safe. We want people to be successful. They've worked their lives for everything they have. It's very important for us to work towards that safety. Where we might disagree on a regulation, then it's incumbent on us to have a conversation with our membership or with the elected officials about that. However, prime example was the one mentioned earlier. There are times where a regulation might be coming where we may make a proactive choice to move in that direction, like eliminating the NSF fees prior to a regulation. And then when its impact hits, that it's not as difficult to make the change.
Let's talk about, and sorry to keep hopping around, but there's a lot of things I want to touch on. Let's talk about commercial lending. Tell me how that looks right now. First of all, let me back up a second. Where are your branches in South Carolina? Real quick.
Wonderful question. So we've got Cherrydale. We have the older branch that's over on Pelham Road, the one that we've had for a while. Okay. We opened Easley.
Yeah.
And then I'm brand new one in Greer.
Okay.
And I know we'll touch on it later about growth, so we'll tell you about
Yes,
that.
we will. Okay, good. Just wanted to, I meant to ask you that earlier. Okay, so you were upstate centric, of course. Tell me what that commercial lending environment looks like right now in the upstate.
It is fantastic. The growth in the upstate, so you have not only the automobile industry, but you have aerospace, you have advanced manufacturing of plastics and metals and other aspects of manufacturing. So you've got the EV revolution, you have the battery plants. So you really have everything. And then just transportation. We are on the 85 corridor. This is the central point between the everything on the East Coast from Atlanta, from Florida, all the way up to New York. So this is a central distribution hub as well. So we are so excited to be here because this is one of the most dynamic growing areas of the entire United States right now.
Yeah,
so it is a very good place to be.
Yeah, it certainly is one of the greatest places to retire. We're on pretty much Greenville, Spartanburg too, on pretty much every list that you'll find of great places to go.
Yes.
I'm going to get you out of here on this, Bart. Let's talk a little bit more about Truliant, what your plans are for the future, as you just mentioned a second ago. What can we expect as we go down the road here a year or two?
Well, fantastic. That's a great question because as we know, the financial industry is always changing.
That's right.
You know, banks, they merge, they grow, they change places, then they come back. Some shrink a little bit or they change their personality. Where we are, what we are looking to do is fill a gap within the marketplace. That industry financial partner that is focused on people who are just getting started all the way to retirement. So we are here for you, whether you are just learning to budget, you're right out of college, right in college. If you're at the technical college, we are great supporters of the technical college systems, really feel that the trades and the people that are going through the trades, the welders and the plumbers, we just have a great group of people as a membership base within those communities. And a lot of times what we do is we help families learn how to budget, learn why they spend. We really put the money and the time back into the community to fill that need, to help people be successful.
Good stuff. Truliant, where's that name come from?
Well, I tell you what, it's a fantastic. When they came up with it, we actually asked the members, we said, who should we be? And they said, well, you always tell the truth and you're reliable. And that's Truliant.
Love it. Bart, I appreciate you joining.
Thanks, sir.
Good stuff.
Glad to be here.
Folks, that is Bart Willey. He is the Upstate Market President for Truliant Federal Credit Union. Appreciate you joining us. We'll be back with another episode soon of Let's Talk Business South Carolina.